struggling to take off due to factors pertaining to the financial sector regulators, financial institutions and SMEs. Let's cross over to that conference being held here in Nairobi at the Intercontinental Hotel and listen in.
SMEs are critical engines for job creation and economic growth. However, we know that most SMEs lack of access to early-stage financing and debt capital are major barriers to growth. We also know that SMEs often struggle to access financing from formal sources because they lack knowledge of how to effectively approach financial services providers. Studies have shown that there are three critical areas in which SMEs tend to underperform, namely to explain the nature of their business, and secondly, realistically describing their plans against robust forecasts, and thirdly, communicating their funding needs clearly. And therefore, they often receive a poor risk evaluation score than their proposals deserve because of risk rating tools are not adjusted to SMEs, their lack of knowledge of lenders, requirements, incomplete preparations, and lack of collateral. To overcome these challenges, ITC's initiative provides a range of financial management and advisory assistance to help more SMEs become eligible to access finance and investment, and to increase the financing and investment facilities available to these companies. There has, for more than 5 decades, been a very close collaboration between Kenya and ITC. And some of our recent projects include 2 projects under the Dutch-financed Netherlands Trust Fund 3, where we're working with the IT industry and IT-enabled services in Kenya, and in fresh and processed fruit sectors to grow their exports. And these projects have also assisted beneficiary SMEs to obtain access to finance. We also have a range of other projects here, but in the interest of time, I think I'll skip the description of those. Just to mention that we also work in particular with women-owned enterprises in a range of our projects. So these projects and the enterprises we work with can represent a pool of future investment opportunities for financial institutions attending today's conference. So to help bridge the gap between financial institutions and the number of SMEs requiring finance, ITC works with local business development advisory services and self-help groups to strengthen their financial management counseling capabilities. Advisors initially work alongside ITC specialists to improve their skills in mentoring and coaching entrepreneurs in accessing financing. After financing has been received, these counselors go on to provide follow-up support to help SMEs realize their projects with greatly improved performance ratios and hence payback performance. Financial institutions benefit from ITC's projects and the work of the trained local advisors as they receive a bigger pipeline of good quality, pre-screened investment opportunities. Well-developed green financing proposals are one of the elements of this kind of financing. Us at ITC, my colleagues and I, we are proud of being associated with the AGF Green Guarantee Facility. The whole objective of the Green Guarantee Facility is to promote green growth and climate-resilient development in African economies by catalyzing bank lending to SMEs for projects and investments linked to climate change adaptation and mitigation. During next week's joint AGF-ITC training sessions at Lake Nyawasha, financial institutions will learn more about the new AGF Green Guarantee Facility that can help reduce collateral requirements for SMEs. We hope that many institutions attending today's event will apply to the AGF facility and will help SMEs play a central role in the low-carbon, pollution-free transition. I'm pleased to see that enterprises and finance institutions from Kenya will be among the first to be supported by the African Guarantee Fund and the Nordic Development Fund, putting them in the vanguard of turning today's opportunities into tomorrow's shared prosperity. I'm also heartened to see so many of you here today. Opportunities aplenty lie ahead. I look forward to hearing your views on how we can address and overcome the related challenges that face us. Once more, I would like to extend my sincere thanks to the Government of Kenya, to our funding partners, and to the finance institutions that are encouraging their staff to attend next week's training sessions with our teams. Thank you very much again for your attention.
Thank you very much, Anders. And I want to welcome and invite someone who has been mentioned, I think I counted 4 times already, and you'll be seeing a lot more of him this morning. This is Habil Olaka, who's the Chief Executive Officer of the Kenya Bankers Association.
Our chief guest, the Cabinet Secretary, National Treasury, who is hereby represented by the Economic Secretary, Dr. Geoffrey Mwau, the Governor of Central Bank, who has not come in yet, but I know he's on the way coming, Chief Executive Officer of the African Guarantee Fund, Mr. Felix Bikpo, the Director, Enterprises and Institutions of the International Trade Center, Mr. Anders Eroe, the Managing Director of the Nordic Development Fund, Mr. Percy Hellman, the bank executives, distinguished guests, ladies and gentlemen, good morning. Indeed, it's an honor for me to be here with you as we drive the discourse on green finance. Given this opportunity to be here in front of you today, I wish to reiterate that this is a timely and crucial conference, which I believe will set the agenda of tackling issues inhibiting our continued success in this sphere. As you well know, green finance and green energy in Kenya is progressively gaining precedence despite various challenges. We have proudly witnessed how financial institutions have aligned their business strategies.
Well, a very good morning. Welcome to our coverage here at the Intercontinental Hotel, where we are covering for you the Green Finance Conference that has brought together different stakeholders in the industry. And right now we are having discussions ongoing, opening remarks from Habil Olaka, the Managing Director of the Kenya Bankers Association. On this particular conference is based on making Africa sustainable in regards to green financing. Well, we want to now let you listen in on the remarks being made by the Kenya Bankers Association Managing Director Habil Olaka.
The bank industry is well supported in this endeavor. I'm glad to state that the Kenya Bankers Association has been instrumental in championing the industry's adoption of the recently developed sustainable finance principles. This has been achieved through KBA's Sustainable Finance Initiative e-learning course that has been undertaken so far by over 21,000 bank employees. Further to this, ladies and gentlemen, KBA, with the support of the Nairobi Securities Exchange and the endorsement of the Central Bank of Kenya, Capital Markets Authority, and the National Treasury, is in the process of developing the Kenya's green bond market. We recognize that the issuance of the first green bond in Kenya will facilitate the rise of a green economy in the country. With due time, I wholeheartedly believe that green finance and green energy in the country will gain dominance, especially in the infrastructure, energy, agriculture, transport, manufacturing, and water and waste management sectors. We can't achieve this without involving the small and medium-sized sector. As you may be aware, in a lot of ways, SMEs are considered to be the backbone of Kenya's economic growth. In fact, the 17 million registered SMEs greatly contribute to the country's gross domestic product by 25% and play a critical role in stimulating job creation. Their success is largely hinged on a favorable regulatory environment and their ability to access finance from banks. Unfortunately, the recent capping of interest rates has significantly affected SMEs' ability to access finance from the banking sector. Consequently, this has also affected the growth of green finance in the country. To address this, the banking industry, through KBA, has established the Inuka Enterprise Development Program. Within the program, a capacity-building training component has been devised with the main objective of equipping the micro, small, and medium-sized business owners with the knowledge of mitigating market risks, sharpening their business management skills, and strengthening their market reach. In turn, through the training, the learners will be better positioned to approach the banks in their quest in accessing loans. Yes, we believe that the training will significantly de-risk the participating businesses and further support the national agenda of enterprise development and job creation. With regard to green finance, I'm proud to say that KBA is setting the pace in East Africa by developing a green bonds market. By 2015, globally, over 45 billion US dollars in green bonds had already been issued. Unfortunately, the green bonds market in Africa is relatively undefined, with the participants having varied consensus in core definitions of what constitutes green finance. To counter this, KBA has enlisted the assistance of the Climate Bonds Initiative to help us establish the Kenya Green Bond Market Principles and Standards, which will provide the framework for issuance in this market. We have also established vital partnerships with FMO, the African Development Bank, and the International Finance Corporation towards supporting issuers and building a pipeline of green assets. By establishing these collaborations, KBA is leveraging on the vast experiences from each to successfully spur the emergence of a green bonds market in the country, which will inevitably lead to other countries in the region to follow suit. As I conclude, it's prudent to mention that in more ways than one, Kenya has proven to be a low-carbon economy. To ensure that this is maintained, key stakeholders need to continue to collaborate to enable the continued rise of green finance and green energy in this country. Moreover, a considerable amount of capital is required to transition Kenya to a green economy. According to the Kenya Green Economy Strategy and Implementation Plan, the amount of capital required to green infrastructure and key sectors such as energy, agriculture, and transportation by 2030 is in excess of $15 billion. This capital must not only come from the public sector, but also from the private sector through the financial sector, as well as through public-private partnerships. Therefore, this conference is quite ideal to ensure that you can stimulate debate and chart the best way forward to realize Kenya's green economy agenda. Lastly, ladies and gentlemen, on behalf of KBA, I would like to sincerely thank the African Guarantee Fund, the International Trade Center, and the Nordic Development Fund for organizing this conference. Indeed, this conference is a vital platform for advancing the green finance and green energy agenda. And we look forward to partnering with you in future. And thank you very much.
Thank you, Habil. By the way, if you're in Nairobi and you ever want to visit Habil's office, it's just down the road. It's got one of the best views of Nairobi skyline. So make an excuse. Pretend you want to discuss banking or something. Like I said, this meeting is co-hosted by quite a number of people, and one of the ones who's serving as a co-host is the Nordic Development Fund, and I'd like to invite Pasi Hellman to please come and also welcome us.
Distinguished participants, dear colleagues, ladies and gentlemen, let me first of all say that it's good to be back to the city which used to be my home for a few years, some 20 years ago. Kenya always has a special place in my heart. I would also like to say that I'm very happy to note that Africa and Kenya have been joining and are joining the international bandwagon for promoting green finance. Green finance is a topic actually that has found its way all the way to the agenda and top priorities within the G20. But global climate challenges call for action by all stakeholders in all regions. This conference, I hope, will highlight the role of the financial sector and the private sector as key stakeholders and indeed drivers of green growth that can move us all closer to the targets and goals that the nations agreed at the Paris Climate Summit, COP21, in 2015. Actually, the rapidly expanding global green finance represents a huge opportunity also for the African economies. One can say that there's even a shift in finance industry to greener operations, and I think the examples mentioned by the Kenya Bankers Association are a very good example of that. It is my strong belief that development and climate finance institutions like the one that I am representing, the Nordic Development Fund, can assist and be catalysts for this kind of expansion of green finance. NDF is a small multilateral institution. It's been established by the 5 Nordic countries, namely Denmark, Finland, Sweden, Norway, and Iceland. And one can say that it's currently the joint climate finance institution of these 5 Nordic countries, with the focus exclusively on low-income and lower middle-income countries. We focus on supporting and catalyzing green growth and climate-resilient development, blending financing from our own countries with public and private sector institutions in Africa and also in parts of Asia and Latin America. I think that development finance institutions actually can support both the supply side of green finance and the demand side of green finance. On the supply side, I think there's a role to assist and support the financial sector to provide and offer green finance products. This is, of course, very much the focus of this conference, and in fact a major reason for establishing the Green Guarantee Facility as a collaboration between the Nordic Development Fund and the African Guarantee Fund. And of course the Green Guarantee Facility is fully integrated into AGF and run by AGF. But there's also a role for development finance institutions on the demand side for green finance. Capacity development, training and awareness raising, which is of course part of this event, is all part of that. But there are other ways of supporting, for example, early stage financing and project development for businesses and developers, targeting climate resilient growth, clean energy, and also adaptation to climate change. And there will be, of course, a special session, panel session focusing on these issues, and hopefully we can dig deeper into that in that session. But all this is the reason and background why I think we are here today. And I would even say that without a partnership between the finance industry actors and climate finance and development finance players, without a partnership where public and private players have come together, we would not actually have been able to attract more than 200 high-level key participants to this event. So I'm very grateful for that. And I wish to express it very clearly, I appreciate the excellent collaboration we have had with the African Guarantee Fund and with the ITC. And lastly, I wish you all and us all a very successful conference. Thank you very much.
So thank you very much to our hosts. I think they have set the scene quite adequately for what we're going to be doing for the rest of the day today. So two things I want to do right now. One is recognize the people who control our money. One of them is sitting there. The other one is sitting there. The one who is sitting in this side is the governor of the central bank. You'll be hearing from him. And you can ask him any question you want to ask him, by the way, very soon. That is Dr. Patrick Njoroge. Welcome. The other one, I'll introduce in 2 seconds, because before that, I want to ask all the panelists for the first session, except for the governor and for Habil Olaka, to please step to the back. I think you all know Terian Chebet. She's putting her hand up. That's Terian. Just step to the back and go to where she is. We want to get your microphones on you. So except for Habil Olaka and Dr. Njoroge, if you're a panelist in the first session, please do so. The second person who controls our money, who is known to some of us but not to all of us, is a certain very tall gentleman. His name is Dr. Jeffrey Mwao, and I want to ask him to please come up right now and tell us why he's being so optimistic. I was telling him he has a smile on his face. He said that smile is a bit misleading. Jeffrey Mwao, karibu.
Thank you very much, Kantai. As you have been told, I'm here to represent the Cabinet Secretary of the National Treasury, who could not be here because of an official engagement outside the country that came abruptly after he had already committed to come to this event. So he asked me to come and represent him, and I obliged. So I'm going to go ahead and read his statement on his behalf. Mr. Anders Aroll, Director, Department of Enterprises and Institutions, ITC. Mr. Felix Bikpo, CEO of Africa Guarantee Fund. Mr. Percy Hellman, Managing Director, Nordic Development Fund. Habib Olaka, CEO of Kenya Bankers Association. Distinguished guests, ladies and gentlemen, good morning. I'm pleased to join you on this important occasion, which provides a platform to discuss financing of investments that generate environmental benefits as part of a broader strategy to achieve inclusive, resilient, and sustainable development. Ladies and gentlemen, you may recall that in 2012, Kenya joined the global community in celebrating the 20th anniversary of the United Nations Conference on Sustainable Development, also known as the Rio +20, in Rio, Brazil, where a renewal of political commitment and a common vision for a new economic paradigm defined as the Green Economy Development Growth Path was adopted. This was strengthened by the adoption of Sustainable Development Goals and the Long-Term Climate Change Framework Agreement, known as the Paris Agreement in 2015. The Paris Agreement, as you know, recognizes the urgent need to enhance the provision of climate finance, finance flow, technology transfer, and capacity building to support developing countries in a predictable and sustainable manner in order to enable enhanced adaptation and mitigation actions by developing countries. Ladies and gentlemen, turning to our local environment, developing economies such as Kenya are among the most vulnerable to climate change impacts. For instance, analysis from the Intergovernmental Panel on Climate Change has shown that climate change is taking place in various parts of the country and will only become more severe in the future if no measures are taken. Our economy, like many others around the world, is still highly dependent on natural resources and remains profoundly vulnerable to the effects of climate change. Our mainstream economic sectors such as agriculture, tourism, energy, and infrastructure are at risk from climate change-related hazards such as droughts, storm surges, flooding, and sea level rises, among others. Furthermore, the financial services sector has also been experiencing unprecedented challenges impacting not only the regulatory framework, but also associated environmental, social, and economic factors. These effects are already being felt across the country. For instance, we have been affected by 12 serious droughts since 1990, with each drought reducing our GDP, our gross domestic product, by an average of about 3.3%. Based on the Kenya Post-Disaster Needs Assessment undertaken during 2008-2011 in collaboration with key development partners, the average annual cost of the damages is estimated to be about $1.2 billion US. To reinforce this message, another report by IFC and UNEP has estimated that drastic climate incidents, such as environmental pollution or epidemics, could cost our economy up to $500 million US a year, and this has serious impact on the health of our population. Moreover, the insurance industry estimates that the potential economic damage caused by the impacts of climate change to be in the hundreds of billions of dollars each year, and is expected to continue rising annually through 2050 if the global temperature remains above 2 degrees Celsius. Hence, the urgent need for financial institutions to act quickly and decisively to mitigate the adverse effects of climate change. Ladies and gentlemen, the government of Kenya recognizes the critical importance of green economic growth and investment. Our Constitution, the Vision 2030, the 2016 Climate Change Act, and the 2017 National Policy on Climate Finance all express clearly our ambition to become a fast mover in relation to climate change objectives. In fact, our 2030 Agenda for Sustainable Development, and in particular Goal 13, emphasizes the urgent need to address the significant financial gap from public and private sources in order to finance adaptation and mitigation measures in a balanced manner. Through the Sustainable Banking Network created by the International Finance Corporation, we joined a community of financial sector regulators and banking associations committed to advancing sustainable finance in line with international best practices. It is therefore important to engage the financial services sector, especially banks, to support micro and small enterprises in adaptation financing early in order to build resilient societies by mainstreaming climate change as an integral part of our business model. Ladies and gentlemen, the government of Kenya has been on the forefront in joining forces with associations, networks, groups, financial institutions, the private sector, civil society organizations, and business communities to innovate, upscale, and support climate resilient investments that are aimed at accelerating uptake of green finance flow in the country in order to advance a green economy development agenda. Towards this end, we have developed various policies, strategies, legislative frameworks. For instance, the National Climate Change Response Strategy of 2009, the Nationally Determined Contribution 2016, the Green Economic Strategy and Implementation Plan of 2015 to 2030, the National Climate Change Action Plan 2013-2017, the National Climate Finance Policy 2017, and the Water Sector Investment Plan of 2008-2030, and the Greening Kenya Initiative of 2011, among other policies and strategies. This has led our energy sector to become the greenest in the region, where more than 70% of the energy being produced is being sourced from sustainable sources such as geothermal, wind, solar, biogas, and hydropower. Ladies and gentlemen, allow me to highlight some specific green finance interventions undertaken by the National Treasury on behalf of the government. In our effort to find new sources of long-term sustainable investment, the National Treasury established the Kenya Green Bond Program, which aims at drawing on the significant private sector demand for investment in environmental projects. The Public Finance Management Act 2012 empowers the National Treasury to mobilize domestic and external resources for financing national and country budgetary requirements, county budgetary requirements. As a result, the National Treasury in 2013 established the Carbon Credit Climate Finance Unit to coordinate and mobilize.
Well, that is the Green Finance Conference ongoing at the Intercontinental Hotel here in Nairobi. The keynote address there for CS Treasury, Charles Keter, who could not make it, and it's being read by one of the officials there from Treasury. We will be getting back to that in a few. Let's take a short break. We'll be back with more.